Okay, I'm recording this video after close of trade Wednesday, 4th of August 2010, and I'm just showing my daily chart of the E-mini here at es.d on TradeStation. And we had a couple of very quiet days. Actually, the range of both of these last 2 days has been less than 10 points. Today was 9.75, day before was 9.5 points, and actually pretty low volumes as well. Today was only about 1.6 million contracts traded. Yesterday we had, it was an inside day, so it was the high and low was less than the prior day's high and low. Today's activity, we pushed a little bit higher, and we're very close to this previous top, the last kind of swing top that we had. But I don't want to talk about the daily chart just yet. I want to go back to the E-mini day trading charts. This is my highest time frame chart I use for my day trading, the 4,500 tip bar chart. And just to show you, I mean, we had actually almost a duplicate pattern set up today and the previous day using the better sine wave indicators and kind of end of trend signals coinciding in lower time frames with cyclical turns in higher time frames. And I'm just going to show you that. So this is the close of the Tuesday. This is the open of Wednesday, and you can see we kind of rallied first thing in the morning just till about just before 9 o'clock, and then we kind of sold off pretty hard to the low of the day. You can see this is where the kind of professionals took their profits, stopping volume pattern way up here, came back down to this low, and the next time the professionals get active, get interested in the market, you see another blue bar, professional blue bar right here at the lows, stopping volume, profit taking right on this cyclical turning point, and it happened to be an exhaustion selling point at that point there. So we know that we've had a good deal of selling. Kind of the sellers are exhausted at that point. High likelihood that we're going to get a cyclical turn. And for me, that's kind of trifecta. This is when I start to see kind of exhaustion selling like this, or bullish divergence patterns, which we saw a little bit later. The professionals kind of coinciding with a cyclical turning point. For me, that's a trifecta. So that's when I really start to get interested that this is a valid turning point. You can see that it was almost kind of a double bottom kind of pattern here, with very, very weak selling the second time that we pushed back into this cyclical low, and then the market kind of took off, and that was the low for the day. And it wasn't dissimilar actually to the pattern that we had on the previous day. Again, this is just backing off for the previous day. This was the close of Monday, the open of Tuesday, and this is the cyclical turning point. We'd had our exhaustion buying on Monday. Here we go with a pullback and an end of trend warning signal here into this cyclical turning point. All this professional activity way at the top. We'd have our exhaustion buying here. This is better momentum, buying and selling, exhaustion buying, very weak buying with our bearish divergence patterns way up here, no demand, stopping volume, and the market kind of sinks off. And the next time that we see the professionals getting active, is right at this low again, coming into this low. They're getting ready, fairly weak buying, stopping volume patterns here, and that was the low for the day, although we almost breached it kind of later on in the day, but that was a good entry point. And I'm just going to show you what was happening on the 1500 tip bar chart and then the 500 tip bar chart. So first of all, this is the 1500 tip bar chart. Here's the high being made, and we came into this low. What I'll show you on the lowest time frame chart is this kind of head and shoulders pattern, or a double bottom pattern here. So this is one shoulder, the head, the second shoulder in kind of an inverted head and shoulder pattern, then the market kind of takes off. This first shoulder was actually marked by an end of trend warning signal on the 500 tip bar chart. The head was marked by an end of trend warning signal here on the 1500 tip bar chart, and then we have this second cyclical turn and the market kind of takes off. You'll often see this pattern where the first low is made by an end of trend in the lowest time frame. Then when we have an end of trend warning signal here kind of coinciding with the cyclical turn on the highest time frame and so on, I've heard that mantra again and again, we get high probability turning points. But here you go, there's the exhaustion selling coming down into here, the professional blue bars, exhaustion selling. We come back in to test that low, if you like. We poke a little bit further down to form this head. We get an end of trend warning signal here, bullish divergence patterns, bang bang, profit taking pattern here, and then when we come back to test, look at all these amateur bars on these lows here. The amateurs are expecting the market's going to continue down, and in fact that's kind of the testing point, and then the market starts to rally from there. Now, just backing off to the previous day, again on the 1500 tip bar chart, we'd had all that exhaustion activity at the end of the day, and we kind of, again, this low was made on an end of trend warning signal here. Slightly different pattern. This was more like a double bottom at this point. The amateurs kind of getting involved too early to take this market on, and then all these professional blue bars coming in this end of trend warning signal here. We'd had our exhaustion buying, kind of pretty exhaustion selling pretty early in the day, but we have to wait for exhaustion both on volume and then on price, and this is the end of trend warning signal is signaling to me that there's exhaustion activity in terms of price. We had all of these bullish divergence patterns coming in, and if you were trading yesterday, you'll have noticed on the Tuesday that it was pretty slow coming. It was just pushing down kind of a half a point or a point at a time, and this wasn't a very strong down move. By contrast, the Wednesday's move was pretty strong. We kind of moved down quickly into those end of trend warning signals here, but this was a very slow kind of move down over the course of 2.5 points or something like that as we kind of broke through these lows, and you could see all these bullish divergence patterns that were forming, and this was slowing down the move. And then this is my kind of favorite, one of my favorite little things. This is a flush, what I call a flush here. We've had these bullish divergence signals here, and you get this final flush of activity, flushing out the sellers at this point. And the amateurs are thinking, my God, this thing's just going to continue on down. No, that's kind of professional activity at that end of trend warning signal. The flush signal is never as much selling as we've got on the exhaustion selling at this point, but it's usually more than we've seen on the bullish divergence kind of peaks, lower peaks down here. So that's a kind of a classic flush type signal here, right on the end of trend, and then the market kind of takes off. And then I'll just show you what was happening in excruciating detail when we look at the 500 tip bar chart. Again, so this is the Wednesday's activity, and this is just after 9 o'clock. And as I said, this was, the first shoulder here is being made by an end of trend warning signal on the 500 tip bar chart. This, the head here in this pattern was being made by that end of trend warning signal on the 1500 tip bar chart, and then here's the other shoulder, and then the market kind of takes off. So you've got all the exhaustion selling here on the 500 tip bar chart. We come back in, all the bullish divergence signals here, just saying that the selling activity is really weak down here, and there's our I mean, it's just a classic for me. Here's our old friend the Rambo pattern right here on the lows. You can see this amateur yellow bar right on the low there. Amateurs expecting that the market's going to keep on collapsing. It's a reversal of an amateur breakout. In this case, it's a breakdown. Amateurs are selling kind of the low, and they just get wrong-footed. The market kind of takes off to the upside. We come back in again, and then this is this test on this other shoulder here, and you can see really weak selling at this point, bullish divergence, and then another couple of little Rambo patterns right here on these cyclical turning points as we're playing around just before 10 o'clock at this 11:18 level, and then the market kind of took off. And then here's the activity on the Tuesday again, just after 9 o'clock. We've got this first kind of push down. This is more like a double bottom here, end of trend warning signal here, Rambo pattern there. We've had our exhaustion selling at this point, and we start to get bullish divergence on this cyclical turning point. The second time we come back in, all these professional bars coming in with a bullish divergence signals low, and then we kind of take off at this point. And I'll see kind of a range of different patterns here. Always seeing professional activity coming into the first push down, and then subsequent tests are usually done on amateur bars, but when you see the professionals coming in again to kind of pick up positions on this second cyclical turn, and then the market starts to rally after that, that's a good point to kind of get interested. And you could pick a range of kind of entry points after that. We come back to test, and then these are the points where you should be making kind of low risk entries, where we get cyclical turning points in the direction of the trend using better sine wave. And if we can combine those with a little amateur activity, if we see amateur down bars like this on this entry point, that's a good signal that you can limit your risks really quite tightly here, and rather than playing with a normal kind of like I would play with a 4-point stop, you can really bring your stops up really quite tight. So that was the first thing I wanted to talk about today, just these kind of although we, two very small range days, less than 10-point range days, you can still make decent trades by looking for cyclical turning points and support in different time frames. Just looking at the kind of bigger picture, where we're going from here, my gut feel says that we're about to break out to kind of new highs, but let me just show you some things that kind of supporting that. So first of all, on the highest time frame tip bar chart, the 40,500 tip bar chart that I'm using just to understand kind of more a swing trading kind of perspective here, we formed today a pullback and an uptrend here, and we had an exhaustion selling back here a week ago that signaled this low here at about 1080, and we've rallied since there. then, and we've not seen exhaustion buying at some point to signal that there's a lot of profit taking going on. So my gut feel says that we're going to kind of push through to new highs. Until we see that exhaustion buying, we're not likely to see an end to this uptrend. And just showing you, this is the daily chart here. We've broken above resistance.